Oil is such an important commodity globally. We watch the price swing and it directly impacts the prices we pay at the pumps, the prices we pay for food, and many other services. But there's something that can't be denied. These commodities are priced to take advantage of the consumer. We're getting screwed over. Big time. You came here for the truth, so let me unveil that for you. Today we're going to look at oil, we're going to look at gasoline, I'm going to show you the correlation between the two, and so much more. Let's get into this right away. Crude oil prices right here. WTI on the left-hand side, it's hovering at about $66 a barrel. Brent is approximately 72. Now, this has moved around a lot, and I want to talk about this very briefly here. You can see over the last 5 years, the charts. This has gone from about $100 a barrel. It dropped down to about $30 a barrel and has since come up quite a bit. But we've got gasoline. And this gasoline is supposed to be tracking the price loosely of crude oil, but it's not. So that's what we'll talk about here. If you look at the price of gasoline, at the time crude oil was over $100 a barrel, and you compare that to what it was at $30 a barrel, we have to start asking questions. It did come down. Gasoline was very expensive at $100 a barrel of oil. But it didn't come down to a fraction of the amount when it dropped down to $30 a barrel. It didn't do that. Yes, it came down, but not to a fraction. And now today, we are seeing prices that are ultimately very, very high at the pumps. What's going on? Why do they not correspond? So let's get into the details of how it all works. Crude oil prices make up 71% of the price of gasoline. The rest of what you pay at the pump depends on refinery and distribution costs, corporate profits, very important, and federal taxes. These costs remain stable so that the daily change in the price of gasoline accurately reflects oil price fluctuations. Not true. High oil prices are what make gas prices so high. If you go back into the pages of history, you can see that prices of gasoline at one point were about $150 a barrel, and everybody was freaking out. Gasoline prices were very high. And then it came down to about $35 a barrel. But you know what didn't come down quite as much? Gasoline prices. Yes, they did come down, but not even close. This is nothing but a scam. It takes about 6 weeks for oil price changes to work their way through the distribution system to the gas pump. Oil prices are a little more volatile than gas prices. That means oil price might rise higher and fall further than gas prices. But you can still use oil prices to predict tomorrow's gas prices today. Now think about this for a second. They're telling us there's a 6-week lag, and of course that makes a lot of sense. However, you see some tensions, you see something happen, and suddenly the oil prices go up. Gas prices will follow. But then everything starts to ease for some reason. Oil prices will go down. Gas prices may be a little slower to go down. So it's funny because anytime they can take advantage of the price of oil, they do. But if it means less profit for them, well, they're going to be a little slow to bring those prices down. Maybe that's when the 6-week delay occurs. That's the way I see it. I know this for many people. Now, we're not talking about record prices at this time, but what I'm telling you is how you look at oil and gasoline together and the way they correlate. It's totally off. It shouldn't be like this. All right, let's get into this further. Recovering oil prices and weaker emerging market currencies have combined to hit consumers' pockets. The result could be a significant slowdown in the very countries expected to be the powerhouses of global growth, and this adds up to another reason for thinking growth in demand for oil is set to cool. Although dollar-denominated crude oil Prices are currently around 40% below their level just before the 2014 price crash. The same is not true of retail gasoline or diesel prices, not even in the US. Think about that. 40% below that over $100 mark. I think it was 110 or so. The same is not true for gasoline. It didn't come down to that amount. It didn't. They're making so much money. They love this. This is a time frame where they're just profiting so much. Average premium gasoline prices peaked in June 2014 at a little over $4 a gallon before sliding to below $2.50 in early 2015 and as low as $2.20 a year later. But since then, they have staged steady recovery, coming within a whisker of $3.50 in the run-up to the summer's driving season. We've got an issue. By the way, this is out of Bloomberg, and they're going to show you the charts here. That's not only in the US, but in other countries as well. So let's look at this. US. Gassing up. US gasoline prices are the highest in 4 years despite the recent easing of crude prices. As I said, it's not $100 a barrel anymore. It's not $150 a barrel. Yet, the prices of gasoline are rising. Energy prices in general are rising. We did get a break, maybe, perhaps, for a little while there, while prices of oil were very low. But it didn't last long. You could see how it jumped up. They weren't going to have it. They were not going to take away from their profits. And I understand from a corporation's point of view, you don't want to have to bring down the price. You want it as expensive as it can get. They just increase the spread, basically. That's what they do. Right now, the spread is massive. It's massive. So that's the US. And we could look at this, China's prices. Gas prices in renminbi are just about back to where they were before the oil price crashed. Now that's something interesting. Gasoline prices, it's a different country obviously. They're getting their crude oil, they're getting it refined, and this may be a factor because of their currency, no doubt. But the average person, what they pay is very expensive. So think of it like that. You have to think of it in that country, not US dollar, because the person in China is going to be paying with renminbi. They're probably going to be earning that currency as well. So for them, the refiners are making a killing. Paying more. Indian drivers are paying more for gasoline now than when crude was over $100 a barrel. So we've got a problem here, and the average person, really, the point of this video is to show you that the average person always gets screwed over. The oil companies are making big money. The gasoline companies are making big money. They're paying taxes. So the politicians get to fill their pockets, getting lobbied. There's all the tax incentives that occurs. You don't get any of those. All you get is stuck with a higher and higher gas bill. And, of course, now they're going to move to taxing people for every mile driven. That's the next scam. But here you are. Okay? So we're looking at China, India, US, all these places experiencing, let's just call it an inconsistent gas to oil price ratio, if you want to look at it like this. If it was always one way, then I could say, okay, that's just the way it is. But it's not. It's weird. It's very weird. Now, one of those countries that is just sitting on a massive pile of crude oil, and unfortunately, it's difficult for them to pull out of the ground. Okay, they don't have the resources. We know what's going on. They're being hit from all sides. So Venezuela, with their Café con Leche index that Bloomberg produces, I mean, I've been tracking this now, and it's unbelievable. You have to see this. A coffee is 2.5 million bolivars. The annual inflation rate now is 109 109,000%. And it's just getting more and more and more exaggerated. 109, over 100,000%. I just, anyway, let me just move on. Venezuela debt wreck marks new milestone as $6.1 billion is unpaid. They are constantly defaulting on their debt. They can't pay back. There's nobody that's going to get paid. If Venezuela owes you money, I'm telling you right now, you're not getting paid. All right? So that's that. Beleaguered Venezuelans braced Monday for the rollout of the new plan to curb the spiraling hyperinflation that has thrown their oil-rich, cash-poor nation into turmoil. Caracas is issuing new banknotes after lopping 5 zeros off of the crippled bolivar, casting a pall of uncertainty over business and consumers across the country. And what they're trying to do is create the sovereign bolivar. Okay, so we're going to have this new currency. It's got 5 zeros chopped off the end. And by chopping off the zeros at the end, that's going to make it really strong. But don't worry, it's tied to the petro. And the petro is going to save them because it's tied to their oil. And the oil that they can't get out of the ground, the oil that, by the way, their exports continue to decline, this is just only, in the end, going to make matters worse. This has nothing to do with why they're suffering today, because they didn't tie it to their petro currency, because they didn't tie that to the oil. It doesn't work like that. Unfortunately, these people are suffering. And oil, a country so rich in oil, is unfortunately unable to make money off it at a time when, they could potentially be pulling it out of the ground, refining it into some nice crude, okay, and then at the same time, then refine that into different petroleum-based products. They could have gasoline. There are countries that want it, but they can't do it, and they're suffering, and it's truly unfortunate. Now, I just wanted to cover this before I finish off the video, okay? We're looking at this out of Bloomberg again. Amazon, massive company, right? Well, they've been doing something that I think is interesting. It's about electricity. It's about energy. So that's why I included it in this video. Well, we're talking about Amazon Web Services, all right? So you may have heard of this before. But essentially, it's cloud computing. So all the data storage is going there, and a lot of these companies, they use it because it works very well. It's reasonably priced, supposedly, and all this stuff, okay? So Amazon Web Services is the cloud. People put their information in, businesses do, and as a result, Amazon needs to get all these different facilities set up worldwide. They set them up so that, they can store people's data, all right? So it takes a lot of energy, and it takes a lot of real estate, basically, to store all this stuff. So they're buying facilities, and they have to pay a lot in electricity. But what I found here is very interesting. Well, they're talking about all the details, but I just wanted to get to the one point. In at least 2 states, it's also negotiated with utilities and politicians to stick other people with the bills, piling untold millions of dollars on top of the estimated $1.2 billion in state and municipal tax incentives the company has received over the past decade. They figured out a way to have the taxpayer pay for some of their electricity. Isn't that I didn't know. I didn't know about this. This is pretty huge. It goes on to talk about other companies as well. Now, from the government's point of view, you want Amazon to stay. You want to make sure that they stay. You want them to pay their taxes here. You want them to be opening facilities here so that they don't say, you know what, screw you, I'm just going to open in Mexico. I'm just going to open in Brazil. You don't want that because they could do that. So you give them tax incentives. Okay? You don't have to do this. You don't have to do that. Don't worry about it. We'll take care of you. Just stay here. And basically the point is that hopefully they're going to pay more, like you'll get more total tax money in, as well as you'll employ people. You employ people to build the facilities. You employ people just to work at these different places. Okay, so I understand, definitely. But it's going a little bit more over that gray area into, territory I don't really like. So that's that. I'm going to end it there. If you found the video informative, please give me a thumbs up. If you want the financial education you were not taught in schools, these 2 books have it all. Check them out. Links are in the description below. And if you're more interested in the audiobook version, you can get that at themoneygps.com.